So I've been wanting to do some of these more specific scenario type of videos because the financial planning process is really the thing that I enjoy the most. So today's video is going to be, I'm 62 years old and I want to spend $100,000 a year in retirement. How much do I need? So my name is Spencer Ford, Certified Financial Planner with Conservative Financial Solutions, and we're going to get right into this scenario. So chances are, if you want to live on $100,000 net a year in retirement, your household income is much more than that. For example, you might make $110,000 a year and your spouse makes $50,000 a year. So after paying taxes and contributing to your retirement accounts, you're living off of $100,000 a year. I note this because the first thing we want to look at is what are your income sources going to be in retirement besides just your retirement assets? So for the vast majority of families, one of those income sources is going to be Social Security. And according to the Social Security Administration, Social Security replaces roughly 40% of a worker's income when they retire at their full retirement age. Now that's just an average, and most families who we sit down with who are looking to plan out their retirement are not the average. For example, only 34% of US households make $100,000 or more a year. And the other reason why that's important is because when it comes to Social Security, it's a tiered system. So if you make more than $100,000 a year, it won't replace 40% of the income that you're leaving behind. It will decrease in terms of a percentage. Social Security is weighted so that a higher percentage of lower income workers, the higher percentage of their income is replaced for lower income workers. So just to restate that, if you make more than the average American, Social Security is going to replace less for you in terms of a percentage. So as we plan in this scenario, we're going to be planning that Social Security is going to replace anywhere between 25 to 30% of the income. You might also be expecting a pension in retirement, but those are increasingly going the way of the dodo bird, so we're not going to include that in our example here today. So really it's just Social Security, and then also it's going to be what you've saved for retirement. So let's kind of get into a plan here, and we're going to add a few details to this, and then we'll look and see how much this couple needs in order to have $100,000 net a year. So we're just going to jump into our financial planning software here and go through some of the details. So I just have John Doe and Jane Doe in here, and we have them, they're 62 years old, so born in 1960, and just showing the plan starting in 2023, January of 2023. The reason being is we're already halfway through 2022 as we stand right now. Life expectancy for John out to 88, and then life expectancy for Jane out to 92. So you might be thinking, hey Spencer, that is above the median life expectancy for Americans. Why are you doing that? Well, as a financial planner, number one is I want to make sure that we plan for longevity for people. The things that used to kill us don't kill us any longer. And then also, again, those life expectancy tables are an average. So most people that we're meeting with aren't, qualifying as that average. They tend to have higher life expectancies, and we want to plan for that. So this is just kind of that background information. We go in here and we talk about income. So we have Social Security. So this would be at full retirement age. So John's Social Security at full retirement age is going to be around $35,200. We have software where we plug in people's earnings record so we can make a determination of what Social Security is going to be and when the best time to take Social Security is going to be. For Jane, her Social Security is going to be around $16,000 a year. And I just base that off of our example. John's making $110,000 a year and Jane's making $50,000 a year. So John is our example, he's working in RT. Jane in our example is a nurse. So obviously basing this off of a real life event here. Then the other thing to note for Social Security is I'm just taking around 32% replacement on Social Security. And then we see here Jane's survivor Social Security. That's because based on our life expectancy tables, we're planning on Jane living longer. So she'll get a step up in her Social Security to match what John's was, but hers is that $16,000 is going to go away. So we want to plan for that loss of income in the future as part of the plan. So let's go into assets here, or their accounts. And the way that I'm illustrating this is just all pre-tax IRA money. So the most the majority of the families that we meet with, most of their money is pre-tax 401k, 403b, or IRA money. It's usually not 100%, so I'm providing a little bit of an extreme example here by showing 100% of the assets as pre-tax IRA assets. But you can see right here, John has 1.5 million in his 401k and Jane has 300,000 in her 403b. So a lot of times when you work for a hospital or something of that nature, you have a 403b instead of a 401k. So keep that in mind. We're at 1.8 million right now, and we'll see how the plans work out in terms of being able to spend $100,000 net a year with 1.8 million. So if we go down to goals, you can see right here, the first retirement goal here is $100,000 net a year. And then what we did was we dropped that down by 20% when they hit age 80. The reason for that is because when you look at spending habits, they start up here in your early retirement years and they tend to fall off until your 80s or so. And then towards the end of life expectancy, they do pick back up a little bit because of increased healthcare expenses and things of that nature. We are illustrating an inflation rate of 2.5% on here. So I know inflation is a lot higher than that right now, but if you go back 30 years to 1992, inflation has actually averaged 2.3% according to the Bureau of Labor Statistics. So we're trying to be conservative by looking at 2.5 as opposed to 2.3. Certainly we've had higher times of inflation, lower times of inflation, and we're only considering 1.5% inflation on Social Security, even though if we go back to 1992 again, Social Security cost of living adjustments average 2.3%. Number one, the reason why we use 1.5 instead of 2.3 is because we just don't trust the government. And number two is because every time they give you that cost of living adjustment, they increase your Medicare premiums too. So you don't recognize that full 2.3%, or you wouldn't have recognized that full 2.3%. So if we go into the financial plan now, we look at this first financial plan, and this is if they were to take Social Security at age 62 and then start pulling income off of their assets. And if they were to start doing that, the success probability of 73%. So what that means is out of 1,000 scenarios that were run, 730 of them, they were able to live throughout their retirement without running out of money. But that also means that 270 of them failed where they didn't make it to life expectancy without running out of money. So 73% is not horrific, but the thing I like to tell families is, let's say you've planned this huge family vacation. We're in Harrison, Ohio here, so you're planning on, a big destination, might be Hawaii or something like that. So you're getting on the plane at CVG. The pilot comes on and says it's the middle of winter. It's snowing. We have blizzards here, but hey, it's a nice sunny 80 degrees in Hawaii. And I believe that there's probably about a 73% chance that we're going to get you there safely. Are you staying on that plane? No. Do you want your retirement to look like that? No. So what are some things that we can do to increase the probability of success for you in retirement? One thing that we can do is actually just delay Social Security. Still retire in 2023 at the age of 62 or 63 in our example, and then wait to delay and take Social Security. The reason being is because if you take Social Security at age 62 and your full retirement age is age 67, it's a 30% reduction in your monthly income. So by waiting, you're going to get a larger Social Security check, which means long term, it won't tax your investment or your nest egg as much in terms of what it needs to provide for you for income. And then the next plan out here is actually waiting until age 70 for taking Social Security. And you can see if we look at this, when we get out to life expectancy, we just have to have this for a second to load, is the 50th percentile. So at the end of life expectancy, there's still $1.2 million left over. And again, for most families with us, they want to be able to live off of their money and still have money left over at the end of their lives. That's important to them. For most families, leaving a legacy is important to them. Doesn't have to be important to everyone, and we can work around those parameters, just trying to provide the example that matches the most amount of people. So again, this is an 88%, and for us, we like to see this 85% or higher. So just as a way to kind of sum up this example for you, there's a couple of things that I want to highlight. Is we're showing an example of 1.8 million. That's what's necessary for this couple based on these parameters to be able to have $100,000 net, at least starting out in retirement while they're traveling more, they're going to see friends and family more. things of that nature. And then obviously that tailors down a little bit when they get into their 80s, which is the normal progression for most families. Now, this is with 100% of the assets being in pre-tax IRA assets. So if you have some Roth IRA assets that are tax-free and you can pull those out tax-free, that would actually be less money that you need to have saved for retirement. So if we're kind of summing things up, I would say in our example, if someone needs $100,000 net to live on a year, you're looking between $1.5 and $2 million. Again, this is going to come down to an individual situation. Each individual situation is different, so your situation is going to depend upon what Social Security is going to provide for you specifically. Are you going to be receiving a pension or not? What's your life expectancy? Are you married or not? Is part of your goal to leave a legacy behind for your children? And if you are retiring at 62, how is healthcare going to be covered until you reach Medicare age at age 65? All of those things and more need to weigh into the equation, but hopefully this gave you an idea, if you kind of fall into this category a little bit, what retirement looks like for you, or what is the potential for you in terms of your retirement income. And in another video, we'll go over how you can determine what your net retirement income needs to be in order for you to maintain your standard of living in retirement. So please let us know if you found this video helpful, and we'll see you in the next one. Thank you.